Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Michael Ashby on the line, and he's CEO and CIO over at AlgoQuant. This episode is part of our Super Return Berlin series, where we bring you the best of those that attended and participated in Super Return in Berlin. Michael, welcome to the show.
Great to be here. Thank you for having me.
All right, Michael. So we got a lot to talk about today. So of course, I want to get into Algo Quant and also what you're doing, really building a quantitative investment platform in the era of AI and tokenization, what that looks like. So looking forward to this conversation. But before we get into that piece of it, Super Return Berlin. Give me some of the backstory. Have you been before? Is this the first time? Like, how'd you get introduced to the whole organization?
It was my first time there. I thought it was a great event. There's a lot of different funds and a lot of allocators as well. So I thought it was very well put together.
Have you attended one of these before in terms of in Berlin or just Super Return in general? It's the first one for Super Return. I know it's huge. I know that it's quite a big event.
Yeah, first on both sides. It's very much known as the private equity, private credit, but I actually
Mhm.
found there was a lot of venture and AI as well this year, which I'm particularly interested in. So I thought it was
Mm,
actually quite a well-rounded conference.
yeah. So before we get into AlgoQuant, maybe give us a little bit of your backstory. Like, how'd you get into this business?
Sure. I spent the last 20 years approximately working in family offices and hedge funds and done London, Switzerland, New York, and Dubai. So I've hit most of the financial capital at this point. I was asked early on what I wanted to do, and I like to break glass and pathfind, and I find hedge funds to be quite dynamic and are always new products. And so I've made this my career and continue to enjoy these small businesses.
Tell me about AlgoQuant. Let's start there.
Sure. So Alcon was formed about 7 years ago. It is two families that formed it to try to build yield on large Bitcoin holdings. They were very early to the space, and it developed into one of the larger quantitative firms globally. So it's about 50 employees currently around the world, and we use algorithms to trade the markets. And so it's been through all the fun and games as crypto has evolved. And I was asked
Mm,
to a couple of years ago to help institutionalize business. I was previously running crypto at one of the largest multi-site hedge funds in New York. I was approached with the mandate to take this to the next stage of the evolution.
what does that look like, taking it to the next stage of evolution?
That's a good question. So it's very much trying to take a business that's a startup and move it into more of an institutional mindset. And so some of it is controls and
Mhm.
processes. Some of it is bringing in a new leadership team. Often what you find with these small companies that they're very research heavy
Yeah.
and actually bringing in a chief compliance officer. So we have been able to attract a former regulator to join us as our head
Mm.
of legal and compliance. And it's just bringing some of the best practice from traditional finance into this space is how I'd frame it.
And what would be the goal of that? Is that to, you mentioned it started with two families. Would that be the goal to attract additional like institutional investors or like what would be the goal of that?
Yeah, the principals have been quite forthright about their intention, which is less about building a large hedge fund. They actually want to build a fixed income business, which I thought is
Oh.
quite neat because if you look at digital assets, there's a lot of innovation in this space, but actually it's missing some of the traditional finance products, what I call good boring. And you have some of this coming out of the likes of MicroStrategy or Strategy, but even that's quite innovative, right? It's more of a credit product. So their idea was to build a fixed income business that provides more of a bond like structure. And so we're in the process of building that. And my actual interest in super returns is actually looking at potential allocations for us. And so in addition to running a pod structure AlgoQuant, where we have our own portfolio managers, we also one of the largest allocators via separately managed accounts to other
Hmm.
headspace. So we have about 20 external managers that we run. And I was there with my allocator hat on to try to find new
Mm.
investments.
That's interesting to me. Like when you, as you mentioned that looking for the, I think you termed it good boring, right? I think that's what you, how you
Yes.
said it. I like that. What do you feel leads to heading towards adding that piece of good boring on? Is it just, is it to stabilize the whole thing based on protecting what's already been built over time? Or like, I don't want to project there. Like what would be the, yeah.
Yeah, it's a good question. So I think I used to be a treasurer, and if you think of a treasurer at a company, they should have the vast majority of their assets in very safe yielding products. And so think money
Yeah.
market funds, treasuries, etc. And then the top end, so the 10% is where they take a little bit of risk. In digital asset space, there's no yield on Bitcoin. You go
Hmm.
out and unless you're going into decentralized finance, which there's no KYC ML, you have to be an expert. There's a huge counterparty risk, et cetera, et cetera. It's next to impossible to get yield on your holdings. And so it ends up being a dead asset. And so given that Bitcoin has increasingly become the largest asset in the digital asset space, there's a huge market for people to provide yield products. And you're seeing some structured products evolve, which tend to be yield generated by options, but we're missing this fixed income. And if you think of just again going back to traditional finance, the
Yeah,
equity market gets a lot of attention, but it's a small brother or sister to the fixed income market.
of
Fixed income
course.
markets multiple. Yet in digital assets, we don't have that. The visionary I work for, his idea was, why do you not have this? We should have this. I took the idea because I said, actually, I grew up in very traditional hedge funds and family offices where regulation, you don't break the rules, right? It's drilled into you, you follow the rules. Crypto is all about breaking the rules, but so I don't feel too comfortable there, but I do feel really comfortable bringing this halfway house into this space where you have this really great combination of a regulated product. So in this case, we're going to issue a Reg S, Reg Ds under a US regulation, if you will, but then it's combining, you can put Bitcoin in and get a yield and a bond derivative type structure. And so I think it's a neat idea. And I think as we evolve and as institutions come into the space more and more, you're going to see more of these type products come into service the lack of yield in the space.
I don't know if this is a fair question, Michael, but and I always think of it like this is it's like, why haven't we had it? And I don't mean to be like, because we are waiting for this to happen right at this moment, but do you think it was just kind of like an evolutionary thing? It's finally time, or the market's finally catching up in this particular space? But that is an interesting question you pose. Like, why
Yeah,
haven't we
no, it
had
is.
that? I don't know if that's a
Yeah,
fair one, but
no,
that's,
no, it's a fair question and a good question again. So I think the weird and wonderful thing about crypto and digital assets is that it's a retail driven market
Mhm.
that's now institutional. Whereas traditionally we have institutional moving to retail. This was done the other way around. And so it's actually now we're finally seeing the institutions enter. And that's really driven by Franklin Templeton and BlackRock. They were the first movers. Everybody else is following suit. So you now have like Morgan Stanley, et cetera, following in. It's going to continue as we get Genius and Clarity come in. All the institutions are going to basically come in. And as that happens, they're going to want things that are more compliant, feel like they're safer type structures. And so I think succinctly answer your question, how to get is that this is retail that wanted riskier assets because they wanted high yield, but they weren't as
Mhm.
concerned about it. Now the holders are changing. And so the product suite that is going to be required is going to change with it.
How do you think this, like, I guess taking it a little bit more macro, how do you think some of these, just tokenization overall and some of what we've been talking about so far, how do you think this affects the overall, the global investment status quo?
I think it's a great innovation in as much as it's going to open up the markets to the everyday person. They're going to have
Hmm.
more access into different regions rather than just be able to access an ADR or GDR. You're going to be able to actually go in and trade. If you want to buy a stock of Apple and you're living in Australia, you can do that on your local exchange. There's different flavors of it that are being developed. So you have X shares and some other these tokenized stocks. And I think this will all still quite early. So we're going to get more and more
Hmm.
iterations. But I generally think that the average person will have better access to invest their hard-earned money. And I think for the companies, it's also going to reduce some of the friction costs, which
Hmm.
traditionally was there, whether it be intermediaries. So I think it's going to be a positive net. The technology stack that we've been using really hasn't innovated in the last sort of 50 years. And so we're overdue for a refresh. And I think this is the refresh that we're going to get.
Mm. Speaking of the technology stack, and I don't know if this directly relates to it, but I feel like it has to affect it on some level. AI, like AI, how does this play into this scenario?
So a couple of different ways. So for our perspective on the investment side, it's enabled us to really reduce our time to market when it comes up to
Mm.
ideas. Typically, when you come up with an idea to source alpha, you have to do a back test and then analyze it and then rerun it,
Hmm.
etc. That would take anywhere from 2 weeks to a month. We can now turn that around in a couple of days. So it's been huge, I guess, increase in efficiency. And that's not just us, that's
Of
all these
course.
funds. From a back office perspective, it's still in its infancy. So you're going to start seeing agents be able to do more and more. And I think almost have this sort of combined tool for your team to work with, which will make them more
Hmm.
efficient. In the more broader macro sense, where digital assets, I think, will actually find its final home is that agents will start transacting for us. And they're essentially, you're going to be able to ask your agent to buy something for you.
Yeah.
Blockchain is a perfect mechanism for to do that. And I think we're starting to see those rails being built. Stable coins have been very successful and will continue to be, but we'll start seeing the combination of the two, and they're going to interact very, very well.
I think that concept of agents buying for you is just so interesting and how that's going to affect our lives, even outside of investment, just like our personal lives. I'm like, that's been my, every once in a while, I get my little obsession on what's next. And I'm like, that's the one I've been on lately, Michael. I'm
Yeah.
like, yeah, go buy me a plane ticket and do this, do that. I don't want, I just want to, can't wait, Michael. I can't wait.
Yep, exactly. You're gonna do what are you gonna do with all your free time, right?
Oh, more, I already know, more podcast interviews.
There you go.
Oh, until my team outsources that one on me. Oh, that's awesome. Michael, this has been a lot of fun having you on today and learning more about AlgoQuant. Final question for you here as we're now, and I'll timestamp this for us. So June 23rd, 2026, if you could take this from a market perspective, technology, whatever you like. What are you excited about right now?
What am I excited about right now? I'm excited to see how we are able to develop this new technology and really
Mm,
apply it to our everyday lives. And I think it's going to take us a couple of years, but I'm generally quite positive on the net effect on what it will have on society. And I feel like it's a little bit like living in a sci-fi movie where I see all this stuff come
mm,
true. So I think it's
mm.
pretty cool to be alive at this stage.
Absolutely. If somebody wants to follow your work or learn about AlgoQuant, how do they do that?
Sure, we have a website that our teams worked very hard on, so please visit that. It's aq.io, and I'm on LinkedIn if you want to reach out. I'm always happy to chat.
Wonderful. For everybody listening, just so you know, we'll definitely put some links in the show notes so you can just click on the links and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. That's right. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So hit that subscribe or follow. And Michael, thanks again for coming on.
Thank you so much.